Hello, this is 13 with another video for Silk Trades. Yes, once again, I am sick, so excuse me if I sound a little stuffy. We're going to go over some SMA. It's a pretty important indicator, and I have had a couple people ask me in the chat room about it. It's pretty straightforward and basic, but the reason why it's so well to use as a tool in your arsenal is because it's probably one of the most popular SMA movements. All traders are pretty aware of this and they use it towards their advantage. Some traders will look for the 200 day to act as resistance, while others might use it to average as a buying opportunity, with the assumption that a major support will keep the stock up. For this reason, the price action tends to conform to the SMA 200 movement average quite nicely. It's used by most traders and as well as analysts. So I really like to use this only on the daily chart. You can use it for different charts, but sometimes they're going to be misconstrued, especially let's say like a lot of volume comes in and the stock price moves up or down drastically. This could be a misstep in terms of calculating if it was a true move or not. But let's go straight into some basic signals. While we're looking at this chart, the 200 SMA is going to be the red line right here. 50 SMA is going to be the green line. 50 SMA, we're not really going to go over it too much right now. I just kind of use it with the 200 SMA to confirm a golden cross or a death cross. So a golden cross is going to be when the stock price, when the 50 SMA goes above that 200 SMA. Usually when that happens and the 50 SMA gets more wider and you get that more that bigger gap, you can usually see the price move up, and you can kind of see this like ascended wedge right here going upwards. And right here when it goes under the 50 SMA, usually that would be a sell signal for most people, and as you can see it would head back down. 200 SMA, if it doesn't go under there, that's usually going to be the next support line. So if it does go under the 200 SMA, that's when you'd probably want to sell again, or probably buy if you really think that it would hold this support line. Down here we can see it's really nice that this was on a 1 minute chart, so I can show you both types of technical analysis. This would be a death cross if the 50 SMA went under the 200 SMA. This is the exact opposite, obviously, by the name. As you can see, the price is pretty traded sideways, but right when that indicator happens, you can see this huge sell-off happen, which is really interesting to note. So those are the basic trends that a lot of people use. I mean, a lot. Like, most traders should know about this, and if you don't, now you do. So let's get straight into it. Pretty basic understanding is signals for the 200 day SMA. If the price is above the 200 day SMA, that is usually a bullish signal. If the price is below the 200 day SMA, that's usually a bearish signal. Now, before you think that's just like, you're going to be a psychic, you're just going to guess when to buy and sell just perfectly. It doesn't work like that all the time, okay? Let's go into it a bit further and understand why. So a bullish breakout for the 200-day SMA is when the price action breaks the 200-day SMA upwards. It gives a strong long signal. So if we looked on a daily chart right here, it breaks. Okay, so here's a good example. It's right here at this 200 SMA. It touches it briefly, but as it breaks up above it, this is usually where you would buy. There's a buy signal right here. The buy signal happens right here because it barely touches and then it goes back up. So it's showing a really strong support at this 200 SMA, and that's where I would get alerted for a buy signal. Right here, when you get that buy signal, you're holding it. It's not going under 200 SMA. You're feeling pretty safe. It's actually getting really close to the 50 SMA. Everything's getting more. The gap right here is getting tighter. Usually when the gap gets tighter, that means the price is going to trade sideways for a bit until it widens more. The best way to use a gap fill is if the gap is way wider. That's usually a sign that whatever trend is about to happen. So if the stock price is above the 50 SMA and the 200 SMA, if the SMAs are getting wider, the gap's a lot bigger, that's usually a sign that breakout is going to be more impactful. It's going to be more stronger and more bullish. So you get your buy signal here, you get that breakout heading upwards, you see the gap getting widened right here, and as you see, it gets right under that 50 SMA. It hasn't gone under that 50 SMA after the 7th month on the 5th day. It just keeps going up. And right here is probably where you want to sell. It's going right under the Ichimoku cloud and hits right under that 200 SMA. Now, as I mentioned over here, you get a buy signal, right? I did get alerted to a buy signal right here, but this time it just doesn't make sense with in terms of fundamentals. So anything going on the news, you'd want to pay attention to as well. So getting into it, let's look at a resistance bounce. So when the price action meets the 200-day SMA as a resistance and bounces downwards, it gives a very strong short signal. So I can't really use that on SPY, and I don't really know a company that might have that going on. Maybe Snap. Let's look at Snap. So yeah, so Snap kind of had that signal. So as you can see, the 200 SMA is right here. As you look at Snap, it's trying to get above that 200 SMA. It's trying really hard on the daily chart. It's tried to do that since 2017, probably since close to their IPO. It did get over there once, but that was just off of a false earnings report, I believe. I think it was pretty hyped up, and people realized that price went back down. Tries to get above the 200 SMA here, tries to get above it right here. That's going to be a resistance bounce, which is basically meaning that it's never going to cross that 200 SMA. That's usually a very strong short signal. So right here, after getting two conclusions of, Snap is not going to go above the 200 SMA no matter what, even with this earnings report, this is where you'd want to short. So if you shorted right here and you held that position up to here, you'd be making a pretty nice profit. So it's pretty good to know the bullish breakout as well as that that bearish breakout. So that's the other side. So if it's under 200 SMA, here's a couple of tips for using it. Make sure the price action respects the 200-day SMA. When I say that, I mean, let's look back at SPY. So this right here, this is not respecting that 200 SMA movement. This whole move in October was happening simply because of the bearish investor fundamentals. So no one is feeling confident right now. Everyone's worried about trade wars. They're worried about interest rates. They're worried about tariffs. Just a whole lot of things going on, especially with Amazon and Google reported. They missed revenues, not by that much, so I'm pretty sure it's an overreaction, but it was enough to have the market go down. So always keep that in mind. Is the price moving because it's respecting the 200 SMA, or is the price moving down because of something that might have happened in the US economy, or an earnings report? So keep that in mind. Definitely keep that in mind, because a lot of analysts that use the 200 SMA, you want to make sure you're not getting a fake indicator. You're making sure that it's following the trend. So another fact to use while trading the 200-day SMA is using a volume indicator. So volumes are very crucial when trading with the 200-day SMA. It's not going to be positive or negative. It's just good to see if volumes are high. Because when volumes are high, that's usually a good sign that the stock is likely to be more volatile and more certain in its breakout. So volume is very important to supply that breakout and moving above those SMA lines. If the price meets the 200-day SMA with low volume, then the average is more likely to suppress the price action or provide support on a pullback. Now, just to be clear, high or low volume are not positive or negative. Just to be clear on that. It is good for high volume for a breakout, but that breakout could be downwards, as we can see right here with this huge spike over in February, all the way down to 252 lows. Trading breakouts through the 200-day SMA only if volumes are high, okay? By bounces give a higher win-loss ratio. So when I say that, I mean like while breakouts feel great when you are on the right side of the trade, remember the market only trends impulsively about 20% of the time. So 20% of the time you're going to get these breakouts right here. Most of the other times you're going to see the stock price move very sideways, moving upwards more than downwards. The beauty of playing the 200-day is that you can place tight stops on the other side of the trade as the price actually begins to congest around that 200-day moving average. Always exercise patience when you're using the 200-day SMA. You should be cautious when trading breakouts with the 200-day SMA. Let me really express patience, okay? If you see the price breaking below the 200-day moving average, wait to see if it is able to close above that average or close under that average. In trading, you don't get a medal for being the first person to jump into a trade. Always make very good investment strategies. Do not FOMO, which means feeling like you missed out. Always realize there's always going to be better trades out there. The worst thing you can do is see a company that you're looking at break out and just beating yourself up over it, saying, damn, I should have invested. Because I guarantee you the next time you see a company and you're like, I'm going to get into this right away, even if you look at the indicators and it doesn't look like a perfect time to get in, trust me, you'll get screwed on that. So always keep that in mind. So just to go over a couple of things that we talked about in this video, moving averages are arguably the most popular indicator in all of technical analysis. Everyone uses this. I don't know one person that doesn't know what it is, that invests for a living or is a financial advisor. One of the most important moving averages is the 200-day SMA. Okay, there are many eyes looking at the 200-day, which makes it a significant psychological level. A lot of people look at it, and I'm not exaggerating that. The two basic trading rules for the 200 SMA are: when the price is above, you should be long. When the price is below, you should be short. That's just the basic understanding of it. As I'm looking at this chart on SPY, I'm very curious to see if SPY keeps going down. I would hope to be bullish on SPY, but there could be a case for SPY going back down to 252 very quickly at this rate. It's had 3-4 days closing above the 200 SMA, only going lower. So we'll definitely see how it goes from there. There are two groups of 200-day SMA signals, which is what we went over. We went over the bullish breakout and the support bounce, as well as the bearish breakout and the resistance bounce. Basically reversals of both of those. So if you have any questions on it, please do let me know. Nothing really to go over too much on this video, so it's going to be nice, short, and simple. If you have any questions or you'd like other SMA signals to be talked about, feel free to ask me. What I went over, though, is usually used for all SMAs. It really depends on how you want to trade, though. So if you want to use a daily chart to day trade, you probably use smaller SMAs, so like a 15 SMA or a 30 SMA. I usually trade swings or long-term stocks, so I'll usually use the 200 SMA, and I'll use the 50 SMA just to give that golden cross or death cross as a signal. Once again, thank you for checking out our video. If you have any questions, shoot me up in Discord. I'll put a link to our trading group in the description. We usually give a month trial to see, if we can help you out, improve your trading habits, and teach you the right way to trade stocks patiently. Once again, leave a like if I was able to help you on this video. It always helps us out a lot, gets us more views. Make sure you subscribe for future videos, and I hope you guys have a great night and a good start to this week's trading day.